why is it a bull run? I think in order to answer that, we just start from this. So I think this is very important. The outperformance group in the US market, because since the China stocks are in a potential accumulation, just very much based on the structure. So this is a potential accumulation structure to be confirmed or fail. So they are the first to fail. The fall. I think that's probably happened in 2021 in February or March, which we'll just go through the chart shortly. So it's probably not too surprised that the one to just bottom out. And this is Queb. Is just like an ETF that track the China stocks in the US market. So currently is probably based in phase D. Is to be, well, we still yet to see the confirmation. We see that there is some kind of the stocks which I also covered last week, last Sunday. Some of the China stocks already outperformed. So like DQ, Futu, VIPS, Pinduoduo, so of them. And the group actually show outperformance. So I think the key is actually here, the outperformance, because right now, I think 2 weeks or 3 weeks ago, since the energy sector just fall, and we just lost the leadership in the US market. So at the moment, we can just say that there is kind of no leadership in the US market. So if we want to trade to the upside, like to buy stocks without the leadership in the market, it will be very, very hard, because even if we can spot some of the individual stocks, they can still run up, but the failure rate is very, very high. So unless we see that there's actually a group that's starting to outperform the index and start to run up together, it means that there is smart money rotate into this group. So outperformance in a group is actually very important. So especially after the fall in the energy ETF. So if the China ETF or the China stocks is the next leadership, I think there should be a lot more sustainable if we trade the individual stocks. However, there's just a warning, plenty of the resistance ahead, and just watch out for the sudden failure. Especially, we are still in a bear market, so very straightforward bear market in the US, and right now is currently in a short-term swing up, so it's a bear rally. All right, so big cap versus the internet stocks. So when I talk about the China stocks, probably some of you might wonder whether I'm talking about the big cap CSI 300 in Shenzhen or Shanghai, or in the SGX China FTSE A50. So A50, I think, is a good representation for the big cap. They're actually the top 50 companies based on the market cap in China. So this future index is actually listed in the Singapore Stock Exchange. So it's China A50. And also for Queb, which was the ETF that you just saw, that's actually the China internet stocks. So the focus is the internet stocks. So let's list it in both US and also Hong Kong. So not only in the US, but also in Hong Kong market as well. And the last one, the PGJ, is actually based on the Nasdaq Golden Dragon China Index, the HXC, which I think I also introduced to you last Sunday. But this is the ETF that actually based on this index. So this is actually the index or the stocks actually listed in the US, with majority of their business conduct in China. So I think that is actually the major difference. So we'll just dive into this different few. One is the index and two ETF to find out what's actually is different between among these three. So China F50, like I say, is the top 50 companies based on the market cap. So you probably can see it here. I already highlighted like Wuliangye, Guizhou Maotai, Ping An Insurance, and also kind of a few big name, China Merchant Bank, BYD, Yangtze Power. So they are the heavyweight. So that's the weightage, especially Guizhou Multi and also the Wuyang Ye. And they're all based in or listed in China. So whether it's in the Shanghai, so SH, or whether it's in Shenzhen, so two exchange. So, but they're all in China. Okay, so QUEB is actually the stocks listed in US and Hong Kong. So here are a snapshot of the top 10, and based on the weightage, I think that's somewhere around 60%. So this top 10 just account for around 60% of the ETF. So you can expect some kind of the big name like Baba, Tencent, Meituan, Jingdong, NetEase, Beike, Pinduoduo, JD Health, Food Truck, and also Baidu. So the last one, PGJ, is the Invesco Golden Dragon China ETF. So it's kind of similar to the QUEB, but I think it's kind of different in terms of the weightage as well. So you can see that they're all listed in the US market, like NIO, Pinduoduo, Baba, Jingdong, Li Auto, Xiaopeng, Trip.com, VIPS. So these are some of the difference. But I think what we really interested is actually just a comparison of the chart here. If you look at this chart, this is like a comparison chart. The one with the candlesticks is the A50, and the orange color is the QUEB, and PGJ is blue. All right, so you can definitely see QUEB and also PGJ, they are very similar in terms of the market movement. So this is a chart that actually started in, I think that's 2020. So I just pick a COVID low. So that's since the COVID low right here. So since the COVID low, you can see that QUEB and also PGJ, they actually lead the way up. So there are a lot high beta, means that when they rise a lot more than this big cap. So if you take a look at the percentage, like that's sort of 100%, 110%, while A50, the peak is just below 50%. So that's kind of started somewhere around in March here. And when it falls, when it drops, you can see PGJ and also the QUEB actually drop a lot more than the A50. So it actually lead the way down, especially when it actually break down. So look at this, that's minus 50% compared to A50 is kind of minus 10%. So definitely high beta, but in terms of the difference between QUEB and PGJ, I don't think there is a lot of difference, because just based on the performance, I think they are very close to each other, just slight difference. So you can see it in 2020, see it in 2021, and also current year. So very closely related, but not so much about A50. But one thing that we can be sure is, I think China A50, or whether QUEB, or whether there is a PGJ, they kind of run together. So it's just the beta or the alpha generated. That's the difference. Because if you look at the trend, so uptrend, there's an uptrend, consolidation, that is upsloping consolidation, and then there's a quick run up, that is a parabolic run up, and that is a collapse of the parabolic trend, that is unwinding of the downtrend. So very closely related. So I would say that whether you are thinking trading the China internet stocks, which is a QUEB, or the PGJ, or even the future index listed in the Singapore Exchange A50, I think the trend generally is the same for all these three. And one thing that is very interesting, especially since March or late April, or sorry, late March here, so I kind of highlighted in this relative strength. So that simply shows that there's outperformance. But I believe that that's actually referred to A50. So since this portion right here, starting in April, and there's an outperformance, means that when we see that the S&P actually generate a lower low, here is actually getting a flat low, or actually trending up. So similarly is the QEP and also PGJ, which are showing up here as well. So there is definitely outperformance since April until now. All right, so now we know the difference between the China A50, QEP, and also PGJ. So let's move on. So why is it a potential accumulation structure? So first, we need to identify the characteristics of kind of the bottoming process and then subsequently into the accumulation structure. So this is a piece of news from Bloomberg, and fund managers actually run away from China stocks even with 75% discount. And that actually happened in March 15. So that's a news headline. So when we see this kind of headlines, it means that there's capitulation. And also you can find out other headline, which probably very similar to this Bloomberg headline as well. So there's capitulation there. So there's a tick. Because in order for a bottoming, capitulation is kind of a key. So of course, there's also others type of the chart that actually bottom without a capitulation, which I also run through the scenario before. But capitulation is kind of a very straightforward thing. So in order to confirm that, we need to look for this selling climax. So that's kind of goes hand in hand. Whenever we see the capitulation, there will be selling climax. All right, so if I hover it here, you can see that this is 14. 14 is actually the selling climax. 14 of March this year is actually selling climax, while the news is actually on the 15th. So that's kind of the capitulation that we see in the Bloomberg News headline that ties up very well with the selling climax, and also the channel oversold. Subsequently, that's sort of confirmed with this automatic rally that defines the trading range. So this is actually a change of character to me, a Wyckoff change of character for this. So the automatic rally is actually the best rally that we have ever seen out from this downtrend. Okay, so the downtrend actually started in I would say probably in March here, or the collapse of this trend. So if you just compare the magnitude, so all this rally, that is actually the biggest rally. So that actually defines the change of character. And I think it just kind of bumped into the channel oversold as well, which is great. Coincides with the selling climax with the increasing of the volume. So that has all the characteristics of the capitulation and also the selling climax, subsequently followed by all these Wyckoff events. So let me go through this. So that is the automatic rally, selling climax, and that is the trading range. And out of this range, I think here is very interesting. So we have this two reactions. Okay, so there's one test, second test, with an increasing of the volume. So what does it mean? So it simply means that there's supply absorption even with the increase of the volume behind. So increasing of the effort, but the price, the results actually fail to generate a lower low. So if you compare the low, there's a low, there's also a low, a flat, and also this is a higher low. So that actually suggests that this is some kind of the supply absorption. So instead of going back to test a selling climax low, it just sort of hang around at the higher low at 24, not at 20 right here. So I think this is also significant. And subsequently, after the test absorption, we can expect a rally. So here's a rally. And this is probably one of the best rally that actually bump into the resistance. So the resistance is right at this 33. Okay, so 33 is a resistance that it first need to break above and come in above in order to confirm that. So after that, it sort of have the localized climatic run up, and that comes with increasing of the volume as well. And the reaction is very constructive. So look at this. So the first reaction and also the second reaction right here. So there are two reaction. So first, second, relatively high volume. So I would say it's probably on par with here or even slightly higher. Okay. So if you just draw a line, I think it's slightly higher than before. So let me hover that. Okay, either on par or slightly higher. But either way, it simply means that with the results show up holding up the gain and tested the access line, the support. So instead of going all the way back to test 24, it just holding up the gain and form a higher low as well. So with the increasing of the volume, increasing of the supply, so high low. So there's an efforts versus results. So there's an increasing of the effort behind the reaction, but it fails to generate a lower low. So results is showing bullishness. So subsequently, I think is sort of forming an apex, or if you want, just simply look at it as a tight consolidation, that's fine as well. So when we get a confirmation out, so means I will say that is actually the resistance 33. So if you can just confirm break 33, and also there's a localized high right here, and commit above, then likely it will just go up and test 40 before we see another meaningful reaction. So 40 is also another significant level. That's the axis line right here. So support, turn resistance, another resistance again. Okay, so out of all this, I also kind of forget one thing, that's down channel. Okay, so the down channel actually defines the trend quite well. So just have a look here. So that's the supply line. So that's actually the first time they actually break above. Okay, so the breakout actually happened somewhere around 1st of June. So somewhere around here, there's a break above this down channel. So it suggests that there's change going on in this trend. Okay, so from a downtrend, now it's breaking out. So hopefully it will just started just stopping this downtrend and into another uptrend. Okay, so there's the accumulation. So that is the bottoming process. So Queb is actually kind of a very typical textbook style of the Wyckoff accumulation structure. Especially we see that there is the spike of the volume and also a lot of the absorption volume right here. So just in case you are spotting, why aren't we comparing this structure to this? Isn't it the same type of structure? So previously, that's happened in July or August last year. So there's actually bump into this oversold of the channel and selling climax, increasing of the supply, and eventually forming the trading range. So kind of similar to what Queb is doing right now. But here is the difference. So the difference is that instead of showing the supply absorption, I mean the dynamics, the market dynamics behind here and here is different. So here is the decreasing of the supply, so suggests a run up here, but we eventually see that there is some kind of the supply involved increasing, and also deterioration of the volume, so a lower high followed by increasing of the supply that actually showing failure. So there's actually a failure scenario for the previous structure back in last year, kind of 6-month structure. Right now, seems like a lot better, and in terms of the supply absorption and in terms of the structure as well. So that is actually the difference. Of course, when will it fail? So the failure case will be a break below. So a break below this access line at around 29, so will be the failure case. So if it fails, it simply means that it will take more time to consolidate. All right, so we also need to watch out for the failure. But right now, the bias is to the upside based on what I explained above just now. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.